Right. So do you see how VIX is moving? Can you see how the VIX is moving? Just as we.
Yeah, I see it's already going down.
Yes. So
because I was checking on the Fibonacci. I see it's on the something like 50%, something like that.
On which time frame?
Just a minute. Um, 30 minutes time frame.
This is 30 minutes and it's on.
We are already on the 38. 38%, yes.
Yes. So once we break that out of side of that triangle, it's simply time to scale in. Then we hold all the way to the TP.
Yes. Also, sir, mainly, yes, I'm focusing on the VIX, but I've noticed that step indexes also. I'm seeing you being interested. I'm seeing also other students being interested on it. So, can it work together with VIX 75?
Step index, it's a really, it's a really complicated instrument, if you ask me, because it has some weird behavior sometimes that personally I don't like. That's why I don't speak much about step index, because I have seen that it has so many things that are not are not well according to me. That is why I don't talk much about it. But as for VIX is the best. Stick there, stick to VIX, focus on VIX, understand VIX. You make your money there. You don't need to.
There's this question that I asked you yesterday. I don't know if I was really not. I didn't catch it. I can say I was not satisfied. So I would like to ask it again, because it's one of the things that you are saying, that VIX is very pure. It's very pure. And also recently, I just came from asking of saying that what makes the VIX to be simple from other market, and how does it become a pure market?
All right, it's going back to the issue of consistency. Like, the more time you spend on the charts with different instruments, you actually begin to see how these instruments differ. VIX, due to the amount of time that we spend on VIX, we have come to the conclusion that it's better, it respects structure more than your step index or your other instruments. Yes, so stick there on VIX. What makes it pure? We might not have the answer, because we don't make these markets. But based on studies, based on what we've studied, we've realized that it's a good instrument. It respects structure, it respects all those things. But what makes it that? We can't have an answer for that, because we are not the market makers. We are not the ones who move the VIX.
Okay.
Yes, so it's now going back to the issue of being consistent, putting in the work on the charts. That is how you get to know and understand these different instruments, how they differ from one another. They all differ. Any other question? Any other question that you might have?
Yes, just one. I see like there's another one who's want to ask a question. Just one. Okay. I don't know if last time I did ask this question. I think like as if I did ask it, but I'm not sure.
Which one?
You just, I remember you just only say that it only respect, it only, whenever it reach on the support, then it has to 10. Now,
It's not
I've
like
been
it has
following-
to. We can't talk in such a way to say it has to. What we know is that when we are at a support, according to simple price action, the market has to bounce. It's not like it has to. Sometimes it even comes and breaks the support.
So there's something that I've did on my phone here. I'm just going to show you something. Which in a way that to know that VIX is overbought, the market is overbought.
What did you do?
I just do some, I did what they call Payapo.
What's that?
I don't know if you will see it. And this is my old phone. So this is the one that I'm using my old phone here. I don't know if you see it proper.
You can send a screenshot the thing, then you send it on WhatsApp.
Yeah. I'm just sending a screenshot. Yes, I've sent it.
Okay.
Yes. So my question was about
Okay, so what are you saying here?
So I was talking about then the market, it does tend when it's overbought or whether the market only, how does it
Can
tend?
I tell you something?
I cannot, yes, sir.
There's nothing like overbought or oversold. Let me just give an example here. BTC USD. Let me give you a practical example of a market that many people, they were always crying and saying, this thing is now oversold, over what, right? This is the Bitcoin. This is the Bitcoin, right?
Yes.
This is the Bitcoin. Mr. Bitcoin, let me just go to the daily. On the daily time frame, right? This is the daily time frame, right? So Bitcoin, it reached, or let me go to the weekly. Maybe it's more clear, right? This is the weekly time frame, right? I remember when it started to drop from here. I remember when it came here, well, they said this thing is now oversold. Then it pushed further, came back here, came all the way there. But they said, now it's oversold. Now it has to go up. This thing is oversold. Pushed further. Now we are here. Many people, they are still saying it's oversold. What I'm simply trying to tell you is that there is nothing like oversold or overbought on the market. If ever the sellers are in control, they can push the market and push it and continue pushing it up until they reach where they want to. Let me show you a practical example as well on step index. Step index, it's a market that has been going down for forever. Ever since it opened, it was downtrending. And so if you talk about that concept of being oversold or overbought, it means somehow, it's a concept that does not apply everywhere, if ever. So this is step index. Step index, look at it from the daily. Look at it from the daily, you realize that, check, downtrending, boom, downtrending. Look at this downtrend. Straight from 2020 in September. This is almost like 2 years. Imagine 2 years of going down. Where is it oversold here? Where is it oversold? Many people, when it came to this area, when it came to these lows, because these were the lowest lows, people say, this thing is now oversold. Oversold where? Because it broke, retested, and continued going. As it was breaking these lows, people were saying, this thing is now oversold. Oversold where? Because it broke and continued selling. So there's nothing like oversold or overbought. If ever the sellers are in control, they will push price and push it up until they're exhausted and they're done. There's nothing like that. Do you understand?
Yes, I'm getting it.
And all those indicators that you have on your chart, you don't need them.
I'm removing them right now.
You don't need them. I don't need to hide this from you. All these indicators, there are so many. Right now, I'm even confused. I don't know. I can't even see what is happening, what is not happening. Indicators, let me tell you the purpose of indicators.
Oh my God.
Indicators, they are simply additional confluence that you add after you've done your price action analysis. You don't need to add all these indicators. You simply need 1 or 2 indicators just to confirm, to say, okay, we are in agreement with my analysis. We are also agreeing the same thing. You don't need all of these. Remove them. You don't need all of this. The only indicator, if you've seen, I only focus on the moving average. If ever there's any other additional indicator that I can add just for additional confluence, maybe it's if you check, this is only a moving average, right? The 50 exponential moving average. 50 exponential moving average. If it's not the 50, it has to be the 200. The 200, it's a long-term one. It shows you the overall trend.
Yes.
So you can even change the difference. So you see the difference between the 50 and the 200. This is the 200. When it was above, it was simply showing you that we are still going down. It was acting as a dynamic resistance. Price came back to this moving average, bounced because it's a resistance, came back again, bounced, came back, broke below, came back. Right now, check what is happening. Right now, step index is at a very critical moment, which is a moment of most probably it's going to buy from that zone. Because number 1, it has broken a major support, a major trend line, which is this one. Number 2, the 200. So here again, I can add the 200 and the 50. They work hand in hand, because the 50, it's a short-term moving average. Then the 200, it's a sort of like a long-term one, because it shows you the overall what do you call this, the overall direction of the instrument, where it is going overall. So the 50 is good because it's also guide, especially when it comes to entry points. I love the 50. So the 200, I only look at it, especially in moments like this when I'm doing my overall analysis. I can see already that it's broken. Okay, same as the 50. So I've seen that already. I don't need it as well. I've seen that it has been broken and the market is now above it. and as well as this trend line. First time it broke, failed to retest, now it broke. So now what I'm looking at is this level which I marked here. I'm looking for the market to reject here, reject this level and close above. Once it closes above, that's where we are going to take our what? Our buy entries. First target is always the recent high. If ever it's now going up, it has to what do you call this? It has to form a higher high. If ever we're not going up high, just to form a higher high, just to form a higher high than this one. Maybe somewhere there. So my Ju, can you see your step index? You said you're selling or you're buying?
I'm selling.
Okay, let's see. Let's look at your step index. So Mr. Didix, do you understand now the concept of indicators? You
Yes,
don't need all those indicators. Indicators, they're just additional confluence just to see is it in agreement with what you analyzed. Just for that, you don't need all of them, all those, you don't need them. So according to me, from the daily time frame step index, we have been forming higher highs and higher lows. That is a clear thing. From this lower highs, if you check, the market came, lower high, came, broke this lower high, higher high, higher low, higher high, higher low, higher high, came back to this low. So if ever this higher low is not broken, market structure is still being maintained.
Okay.
Right now, forming higher highs, higher low, higher highs, higher low. Now I'm expecting it to break, maybe do this, something like this. Something like this. Can you see my Jew?
Okay.
So you see the importance now of starting from the daily. You might have gotten sell entries based on smaller time frames, which will be correct. But when you are now looking from the daily, you can actually see that it's at a critical zone because it broke a major trend line, as well as a dynamic support, which was the moving average. So now push, look at this push to the upside. This must tell you something. This push, look at this first push, correction. After every push, we have a correction. Push, correction, push, correction. So you are trading a correction, mind you. You are trading a correction, which is not a wrong thing to do, but I'm simply enlightening you so that you also know, just in case you had high hopes to say maybe it's going to continue selling for long.
Yeah.
You understand?
Mm.
So I'm just, it's just a way of showing you, just in case you were hoping to say maybe it's going to sell for long, but according to what we saw on the daily, the probability of it to buy is now high because already market structure has shifted. We are now in a bullish market structure, as well as everything now is pointing towards the bullish side of things. So here I can also draw this trend line, just in case it comes to this trend line. It will also guide us for buy entries.
Okay.
I have something like that. Let me draw it nicely. Something like this. So here we are. Push, correction, push, correction. So this correction, it can come and break. So your sales is not like they're wrong. I'm not saying they're wrong, but I'm simply saying it can be a correction before we continue pushing.
Okay.
Yeah, so don't be worried and say, so I must come out. No, You don't need to come out as such, but you simply need to be aware of this bullish channel that we now have currently. In a bullish channel, as I have always been telling you, the buys are the impulse moves, then the sells, they are most probably the corrections. Impulse, they were the buys, correction, the sells. Impulse, buys, correction, the sells. So right now you're in a correction, so most probably the next impulse I'm expecting maybe around the 50% Fibonacci, maybe somewhere there, around 50% Fibonacci, then maybe on the trend line as well. Then we continue pushing towards the negative 27%, which will be the TP, first TP for those buys that we will take. So current move, this is the current structure that I'm having for step index. Here have this structure as well. Have that structure as well. Have the overall bullish structure as well as the structures in between. So the sales, you are somehow okay. You are okay to take the sales. I don't know which structure or which entry point did you consider before taking the sales? Where did you enter?
Is it 87?
At the top here.
Yes.
Okay, that's a beautiful entry. You're still in.
Yes.
Aye, that's wonderful. So you've been holding since from the top there.
Since morning, it was just
Like did you enter here?
Bottom.
Did you enter there, my dear?
Hello, Michael.
Did you
Yes.
enter here? Okay.
Yes.
Wonderful. So that was a clear, either you could have, so you had this structure. This is a structure that is in between the overall bullish channel. So this structure could have guided you after this break here. You could have entered on the break or the retest, which is where you entered. So both of us could have just been correct. Either you enter on the break or the retest, like what you did there. So they actually formed the double top, which was a good confirmation to say most probably we're going down. So a double top, as you know about double tops, they always have a neckline. Either you entered on the double top or on the break of the neckline, you could have entered as well there. So now I'm looking forward maybe to this zone. I'm looking forward for it to push here, maybe then go. Something like this. Unless it comes and breaks here, but it's very rare for it to just break structures just like that. So that must be your current target now. Here, all you need to do right now is to shift stop loss to maybe this, because here I'm seeing a support here. I'm seeing a support there. Let's see on 30 minutes. On 30 minutes, let's see. So you just need to shift your stop loss lower and make sure that you conserve some profits so that your profits are not taken. This is a support here where it is right now. Support. So it can bounce there on the support. It can bounce on the support. What you can do, just shift your stop loss lower maybe to this area here or this area here. Those two areas, you can actually shift your stop losses to those areas.
Okay.
Yeah. So, but this one is the best one because it will help you to at least close maximum profits. Or yeah, this one is better. Or you can even close manually. Then maybe after the break of this support, you can actually maybe take other sales as you'll be waiting to reach this full target here. Right. So that
Okay.
is what I'm looking at on the step. I have this inward structure, which is simply a corrective move. This whole moves that are happening, these are simply corrections of the bullish impulsive move that happened. So from here, I'm expecting a bounce. So here as well, if ever it rejects here, you can safely take buys. The buys, they are also in agreement with the overall market structure as well as the bullish channel that we're having. Once you get the rejection here, you can safely take your buys. Your target is at the top of this channel, bottom, top. You understand?
Yes.
Yes, so that is what we're looking at on step index. Any questions? Any questions on step index? Any questions on the step? Anything that you need clarity on? Any questions? So I hope the step index analysis is clear. I hope it is clear. Do you have any questions? Any questions? Any questions? Any questions?
No, I don't have.
All right, so that is what we're expecting. If it breaks below here, we are targeting now the trend line there. Targeting the trend line before maybe we push to the negative 27. Mr. Didix, are we together?
Yes, sir.
So step index, you can it's also a, what can I say? Is it a good instrument? I can't really, when I compare it now with the VIX, VIX is more better when I'm comparing it with the VIX.
Yeah, it's true.
That was just a question. That was just a question of curiosity. Otherwise, I'm really focusing on indexes because I just don't want to complicate myself. Once I start
Very
looking
true.
on step indexes, boom 100 or C 300, I'm going to confuse myself. So whether they are better opportunity, I don't care about them. Whether they are better, a nice setup, like the way you said, nice setup of market, I don't care because I might be focusing on the step indexes, whereas VIX is just giving me an opportunity and I don't know again what to do.
You see now, so that's the danger of focusing on so many instruments. You realize that these other instruments is presenting a beautiful opportunity at the same time that you are trying to confuse yourself with this other one.
To be honest, I blow the account almost 7 times. 7 times I was trading gold. I blow the account 7 times. I can say more than 7 times, but I'll keep on pushing. I'll keep on pushing. I blow my account 7 times. I changed gold. I started GBP. I blow the account. But to be honest, since I started with you last time, the money that I withdraw, the first one is the one that I sent you.
Okay.
So that's the first money that I withdraw.
Was that your first withdrawal?
And the second one, yes. And
Wonderful.
The second one is
Wonderful.
I just did it recently. This last week.
Wonderful. Wonderful. Do you know the power of withdrawing? Can I tell you?
Yes.
Right. The human mind is like this. when you're trying to do something new, the human mind, it tends to take time to believe in the thing, even though you might say, I believe that this thing is working. So when you withdraw, it's like you're telling your own mind to say, this thing is working. Once you have done that,
Exactly.
it gives you a far much advantage than someone who is just growing the account without doing constant withdrawals. That person, those are people who can even blow that money in a day. Why? Because they haven't felt the reality of the money that they are trading. So when you withdraw, you feel that reality to say this thing is actually real. And when you feel that reality, you're going to take it more serious than a person who is just growing accounts and not withdrawing. That's the power of withdrawing. So it's a good thing. Yeah, maintain that thing.
My question might look like a tautology that I'm doing, but I believe it's gonna not only helping me, but it's also gonna help those that we are with right now. So last time we were talking about discipline. What kind of a discipline one can take? Because you talk about, yes, consistently. It's a part of improving, making one to be successful. And I believe the last time you were talking about a lot of things like a discipline when it comes to trade. What kind of a discipline that, for example, you as a mentor, you took and you have, which is making you consistently and focusing in your success. And you were talking of saying, I remember you were talking, and I like that that advice that you're giving. You're saying every successful person, he has discipline. They have got one things that they follow and which makes them to be successful. So particularly to trading, when it comes to trading, because I know I'm into, first of all, I'm a pastor. Yeah, I'm a pastor. I've got a church. I'm running a church and as a pastor. So apart from there, now when it comes to trading, what is discipline that one can take and follow?
That is a broad question, but the discipline, it starts from the emotional discipline, right? Emotional discipline, both when you are having winning trades or having losing trades. Are you able to maintain the same emotional stability, both when you're winning or when you're losing? Many people, when they are winning, that's where they grow into overconfidence. And once you grow into overconfidence, sometimes you begin to see things that are not even there on the chart. Or when you're losing, you grow into anxiety and fear. And when you do that as well, you also see things that might not even be there on the chart. So both sides are key now. So meaning discipline, what is discipline on that level? On that level is the ability for you to maintain the same emotional stability, both when you're having winning trades or losing trades. It starts there. It doesn't start on, before we even move to lot sizes and whatever. Those are secondary things that come after you've managed to emotionally first maintain discipline there. You understand? Yes. So once you succeed there, all these other ones, all these other disciplines, they are easier now to follow. That's where it's easy for you to make sure that you are putting the correct lot sizes. You are waiting for setups to fully complete. For example, this is a setup that we have been having since morning. Someone without discipline, do you know what they did? Before even the trade hit stop loss, they came out, right? That is a sign of a lack of discipline. Why? Because number one, you're not disciplined enough to stick to your setup and trust your setup that is going to work out in the end. So an undisciplined person right now, they came out of that trade in as much as it never even hit stop loss. Another thing is you are simply waiting. Once you have seen that that is a symmetrical triangle, a disciplined person is going to wait for the breakout of that triangle. The breakout of that triangle for a disciplined person is going to be the confirmation to say, now we are going, maybe that's when I can add another trade. Someone who's not disciplined, they will add trades whilst we are still inside the triangle. You add more trades whilst we are still inside the triangle, add more trades, but you realize that at the end of the day, you might not as well achieve the results of someone who is going to wait for confirmed moves like that. So it goes a long way, but it starts there on you maintaining the same emotional stability, both when you are winning and when you are losing. You need to maintain the same state of mind, the same state of emotional balance, whether you are winning or you are losing. It's like when you're in boxing, when you're a boxer, when they are punched, when they receive a punch, if ever they change their emotional or their psychological balance, they have lost the game. Why? Because if you become emotional because of that punch that you're given, you start to want to react, right? In trying to react, you are going to do things that are not fully moves that are not well calculated. You're going to do them and you're going to lose that match, because that same person whom you're fighting is maintaining the emotional and psychological balance. He can actually read you and see that you are reacting instead of responding in a positive way. You are simply reacting to what you've been given. So that person is going to beat you each and every time. Same as here in the market, you need to maintain the same level of emotional and psychological balance and not allow the market to don't react. We don't react here. We simply wait for confirmations. Once we get our confirmations, then we attack. Once we get our confirmations, then we attack. Simple. You understand?
Yes, sir.
Yes.
Yes, sir. It's powerful.
Yes. So that is it. That is it. The VIX, we are now expecting for it to now start moving now. We're not expecting for it to start moving. This was the move that we're expecting and waiting for all day long.
Yes.
Yeah, so that is it. That is it. That is it. That is it. Let's